The Agweek Market Wrap is sponsored by Gateway Building Systems.
Welcome to the Agweek Market Wrap, brought to you by Gateway Building Systems. I'm Don Wick with the Red River Farm Network, and we're joined once again by Randy Martinson from Martinson Ag Risk Management. Randy, of course, the big market influence this week, of course, the acreage and stock numbers this past week. Looking at those acreage numbers, it seemed to me at least the soybean number was the one that stood out. Was that a bit of a surprise to you?
It was. I didn't expect to see a million, well, North Dakota being 1.1 million acres short on the soybeans compared to what we were thinking of, before. And then looking at it as far as the world is or the U.S. is concerned, down to over 2 million from the March report and 2 million from expectations. That was a little bit deeper cut than I anticipated on the soybean side.
Well, we are going to see a resurvey of North Dakota, Minnesota, South Dakota. What do you expect out of something like that? We had a resurvey a couple of years ago.
Traditionally, when you see these resurveys, you always come in with lower acres, because it gives you the indication that there was issues on the planting season. So it's likely we're going to see a revision down in those acres. That's what I would expect to see. How much, I'd almost think that, wheat would be a little lower, corn would be a little lower in North Dakota, Minnesota, South Dakota. Soybeans might see a little bit of an increase.
Now, with soybeans, the way things came in that acreage report and where we're sitting today, what pressure does that put on us to put a good crop this year?
Quite a bit. That's really the good point about this is that, seeing the less acres and the growing conditions that we're having, not that we see ideal conditions, but they're good. Puts that much more pressure on trend line or better than trend line yields needing to be accomplished this year, especially in the soybean side. It's likely the stocks estimate will come down and get cut tremendous, in the report that comes out now here on July 12th. I think it's going to be coming out. So yeah, that's going to be some interesting numbers when we see them.
Oh, corn and wheat, we had a pretty ugly end of the week. It was a rough go in many cases. We have a 3-day weekend we're going into. We're at the end of the month, beginning of the month. What kind of factor did that? Why did we see kind of the pressure we had here in those markets?
I think we saw the loss. The funds were basically bailing out of their positions, and some of it was ahead of the long weekend. Some of it was just seasonal movement of the market. I think we also saw some additional recession talk, liquidation taking place as the funds are, basically getting out of their positions, taking their money and going home, putting it in the mattress. I do think that some of what we saw also was tied to better weather forecasts once we come back. Now, this weekend's supposed to be a little touch and go yet up until that 5th, but then next week they're talking about cooler, wetter conditions for the Corn Belt, and I think that really is what the trade is looking at.
With the corn and wheat going down hard, that if we're looking for any silver linings, the feeder cattle market had to take a bounce off of that.
It did. The cattle markets performed well. Cash cattle for the live cattle market bounced up. When we're coming off a friendly cattle on feed report from last week, so all that came in to help push the cattle markets, and they traded decent. It's just that the grains were pretty ugly here for the second week in a row.
We've been talking about logistical issues, it seems like every week, and those stories continue. We're talking about a trucker strike in Argentina, and on the West Coast, port workers, their contract expiring at the end of the week here. Really, how does that really have much influence, or is it just kind of adding salt to the wound?
It does. Look at how the July or the front months have performed here. Over the last couple of months, actually, our basis levels continue to be fairly strong, and we've been seeing a wide inversion in these markets. Up to $2 between the July and the August in the November for soybeans. So it tells us that the supplies are tight and the end users want the product. It's just having a tough time getting it in. When you look at the soybean plex, really the bright spot this week was soybean meal, which is kind of odd when we're looking at not as many animals, but yet that meal market led us.
If I could just sneak in a question on some of these specialty crops, that acreage report, really for sunflowers in particular, it was some significant gains we saw in those acres in this USDA report.
It was, and we expected late season crops are what, kind of people led to here in North Dakota and northern Minnesota. So I expected to see an increase in the later season ones. I was surprised that, dry beans didn't see a big increase. Barley acres saw a little bit of an increase. Durum acres increased. That surprised me, especially with the very little influence or they didn't really bring an incentive over spring wheat this year as far as insurance or planting was concerned. So I was surprised to see Durham have a little more acres.
With sunflowers, like you said, a late planting certainly favors that. Do you think with the Ukraine being such a player in sunflowers and really those oilseed markets, that was part of the consideration as well?
Most definitely. I mean, that's what's kind of pushed the prices to, levels we've never seen before in sunflowers. So I do think that helped add to it. And then the fact that we've got demand because now those buyers of sunflowers and sunflower oil out of the Ukraine had to go someplace, and some of them are coming to the U.S.
So we've got another 3-day weekend going on. What's going to be the influence? What's going to be the story when we come back here on Tuesday?
I think weather will be one, and then just whether or not the funds want to come back in and start playing in the sandbox again. I think that'll be the big part of it. Also, the economy. If we can start seeing that stabilize, and maybe the Fed slow down some of their talk about their, need to continue to increase the interest rates by 3/4 of a point, I think some of that could cool this market down a little, and we could see a little better performance.
We wish you a good holiday weekend as well, Randy.
All right, same to you. Thanks, Don.
Randy Martinson from Martinson Ag Risk Management. Keep in mind for markets and market analysis throughout the week, you can listen to your local Red River Farm Network radio affiliate, or you can find that information online as well at rrfn.com. With the Agweek Market Wrap, it's sponsored by Gateway Building Systems. I'm Don Wick.